Financial scams are not a new phenomenon, but in recent months, there has been a massive increase in cybercrime in the financial industry, and this is beginning to alarm regulators. And guess what seems to be driving it? The advent of artificial intelligence, or AI. This week, I'm delighted to be joined by Sunil. Sunil, what's going on? We've heard so many positives about AI, but this is a worrying development. Can you explain how AI is enabling new types of fraud?
Well, in very general historical terms, it's not the fraud that's new. There have been frauds for as long as people have been making promises or trying to trade with each other. But in general, periods of disruptive innovation, when people start doing things differently or are contacted and accessed differently, are quite fertile times for fraudsters. So we think about the early days of email, mobile phones. They were great enablers for new forms of cybercrime, and AI might well be now at one of those moments. Obviously, it does have great potential for good in terms of improving productivity, but also great potential for fraud. A recent security kind of industry survey said that by, let's say, 18 months, 2 years' time, cost of cybercrime globally might be north of $10 trillion. Now, put that into perspective, that's more than the annual economic output of Japan.
Yeah, wow, that's a huge number. But how is AI actually enabling these scams?
Well, look, it makes the old types of phishing scams easier to do at scale, maybe a slightly better personalization than your non-existent uncle in Nigeria used to be. But the real risk is if we see more persuasive scams than before because they're of a different kind, which brings us on to the idea of deep fakes or fake videos. It's relatively simple these days to take about 30 seconds of sample audio of somebody really speaking, which you might find on social media, use that to clone their voice and create realistic fake audio of somebody you know or someone famous asking for money. And then the deep fake is when you actually create the video as well based on what you can find on the web, etc. So earlier this year, we had a story of a well-known financial kind of personal finance expert in the UK, Martin Lewis. A deep fake was created of him on social media pushing a financial product, caused people to believe it was him, and they clicked on the links and invested in a fake product.
Okay, so I think this is pretty extraordinary. I mean, you could literally mimic or clone the two of us doing this episode today. So this type of fraud is becoming kind of even more sophisticated, as you mentioned, and even harder to detect for people watching them. What can banks and financial institutions do to kind of combat this?
Well, more of the things that they always do. So you spend money on fraud prevention, detection. You try and educate customers as best as possible about what the latest scam techniques are. But I guess one interesting aspect is also the idea of using fire to fight fire. So banks taking on the technology, using AI to spot suspicious patterns. Deutsche Bank recently announced that they had been rebuilding their suspicious transaction monitoring to use the latest AI and large language models, look at transaction data like the size of the transaction, the currency, destination, and try and learn over time which patterns end up in fraud. I think the last part is to try and get the financial industry to partner up with the tech platforms, get them to take some responsibility. Something close to our hearts, which is investment. We know that the fastest growing scam category is investment fraud. And we also know from a day-to-day basis how much time and money established firms put into customer protection suitability. But if those credentials end up being faked by bad actors, then the financial industry is going to be blindsided.
Yeah, so true. So although those steps you mentioned they're kind of a good start, to me it doesn't seem like the problem is going to go away anytime soon. So what are some of the challenges in fighting these kind of AI-enabled fraud schemes?
Speed and sophistication, I think, is perhaps the biggest channel. The fact is, scammers, like all criminals, adapt very quickly and find workarounds, and AI is just helping them to move more quickly. Secondly, I think there's just a question of scale, which is already a problem, but may well amp up. We had a large bank in Australia, Commonwealth Bank, recently confirming that they track about 85 million events a day on their financial surveillance tools. Bear in mind, Australia has a population of 26 million people, so the scale is significant. And I think the last challenge is perhaps at a law and government level, which is just to say, well, who's really responsible, who's liable here? And in particular, if somebody loses money, who pays? Is it the customer? Is it the financial institution they bank with? Is it the tech platform on which they came to hear about the scam?
Vanilla, really interesting topic in so many kind of ways. It brings home the need for serious vigilance on choosing sort of financial products and services. Sunil, thanks very much for your time this morning. And we'll be back again next week with another topic that's caught our eye.